Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research.
पर नॉर्मली जब स्थिर सरकार आती है तो स्टॉक मार्केट बढ़ता है। इसलिए मैं कह रहा हूं कि 400 पार होने वाला है। मोदी जी की स्थिर सरकार आने वाली है तो निश्चित रूप से बाजार ऊपर आएगा।
जिस दिन चुनाव का नतीजा आएगा, आप इस हफ्ते भर में देखना कि यानी भारत का स्टॉक मार्केट के लिए उसके सारे जो उनके प्रोग्रामिंग के जो प्रोग्रामिंग वाले सारे उनके थक जाएंगे।
Well, the government is not just optimistic about its comeback, but they're also predicting a booming market post their victory. So is now the time to invest? And if so, where to invest? Let's discuss this with Dhirendra today. Dhirendra, first up, how do political events like elections affect the stock markets in India? And should investors tweak their investment strategy based on such events?
Events like election has a big bearing on the stock market in the sense that if we expect that something is going to, the outcome of the election is going to be something which is generally expected that it will be very damning for the market or it will be very positive for the market. So right now the view is that, there is a tilt towards the opinion that there is likely to be a continuity of the government. Whether it's only being debated that, what will be the scale of majority, whether it will be, 400 par or 300 par, but, a simple majority also does the job. And with that in mind, I think, the market is not as much anxious about this. Even a simple majority will do the job. If, a good part of the market is expecting this and something else happens, then we are in for a big surprise. And markets don't like, markets like stability. Otherwise too, I feel that, this is a short-term view. What will be the effect of the election results and the outcome? The real point is that what will be the medium-term and long-term implication of this? Not much, because, many of the things that government, there will be a impact on the speed of things happening. If this government is perceived to be very, decisive, it actually acts in right earnest and it shows the urgency of doing things, it's business-like, then it will have a bearing. But, when it comes to the policy measures and other things being done, most of the thing that has been done is not reversible. We are likely to be, there is likely to be a continuity. So this is an important event. But important event only if it is going to have a bearing in a negative sense. If there is likely to be a continuity, then we haven't witnessed any kind of anxiety in the market, and that is not reflected in the volatility. We have seen some intermittent decline here and there, but nothing beyond that.
But we just heard how the Home Minister said that markets are going to take this upward spiral once the election results are out, and the Prime Minister also kind of endorsed that. So should the investors tweak their investment strategy right ahead of election results?
Investors should be, planning their investment irrespective of this. Because it's always a good time to invest in equity if you're investing for many years.
Right.
And it is always good to be fully invested if you have decided that this money is not needed or has to be invested for 5 years and more. Now the point is that should you be timing it? If you were waiting for correction, if you are waiting for this election results, or if you are waiting for this election, which will be a turning point, you would have missed the biggest gains that we have witnessed in the market. If you look at many of the funds where mutual funds, normal, average, diversified mutual fund, many funds where the money has doubled in the last 3 years. And it has been somewhat consistent. It is, you look at the 3-year performance of most of the funds. It looks like a very nice, smooth, straight, a line going up. So you would have missed it. You will keep waiting. We are an island of growth. Foreign investors are finding India that the continuity will translate into something of a very significant opportunity. If there is continuity, you have reason to be optimistic. But don't get excited about it. You should have your plan independent of election. I don't think you should be doing any asset allocation based on the election result, or this will happen, then I'll do this, because you have to do it for many years. So don't worry about the election, have your plan, but feel happy about the election.
All right. And what specific, keeping all of this in mind, is there any specific sector or stocks that investors should be investing in at this point of time?
There could be some sectors where, we have got the inkling that it will be positive, but how to precisely benefit from it? Like before getting into the election, there is a plan that there will be a solar resurgence, or, there will be a huge emphasis on that, or electric vehicles, or, few other things which will be emphasized. But I don't think, there are two sides to this. One is that if you are going to focus on this where you don't know how to really participate in that especially, then there is a problem. The other is that, if the government is going to be generally positive for businesses, then you don't need to worry about it. Build a diversified portfolio, keep away from poor companies, and that's all that you need. And what will particularly do very well, that is why you choose a fund manager, that he should decide on that.
Okay, are there any risks that investors should be wary of or should consider before investing at this point of time?
The noise around election gets so well established, and now because of the social media, we get very biased with our opinion, that we start believing that what we believe is going to happen. And if you get a surprise, if there is a general surprise to the consensus that has been built, we could be in for a big surprise in the market. If everybody thinks that there is going to be continuity of this government, and somehow it does not happen, then we are in for a big surprise. And it could be short term, it can linger for the medium term. So that is a risk. In anticipation of these election results, all that investors should do is be upbeat about India. And if we are unlikely to have continuity of this government, and if it is likely to have a good majority, it can continue to it can continue to remain decisive about business policies and other things. Then I think you have every reason to be positive on the business outlook. And if that is so, India is proving to be an island of growth. Everyone in the world is struggling. We are the only ones which are actually growing by leaps and bounds on a relative terms. So if that happens, plenty of things will change, and change for good. In that case, be a growth investor. Don't try to over-engineer things. Entrust your money to choose few good growth funds. Choose some multi-cap fund, some small cap fund, some mid-cap fund. That's about it, 2-3 funds. Be at it, keep investing. Don't borrow and invest, but try and invest as much as possible. The best time for, making investment and generating returns is the time when, these companies, the growth happens in certain period. In the inopportune time, things won't happen. And, plenty of future might get discounted in the market in a hurry.
All right, so that answers where to invest before election results. Now let's go on to a viewer's question. Rudra Chakrabarti has sent in a question asking, please confirm when market is at all-time high, can we invest in balanced advantage funds or should we wait for a correction? I also want to draw SWP income of yearly 7.25%. So please suggest, also if you could suggest some fund for SWP.
When you are investing in balanced advantage fund, you should not spread your investments over time. You can well invest at one go. And to make sure that you are not catching a market high which could be unnerving, what you should do is, the money that you need in the first 1 year, keep that money in a short-term debt fund. You don't set up a systematic withdrawal plan, instruction in the first year. Wait for it after first year. After 12 months, you will do it. The money that you need every month, that you should keep in a short-term debt fund. And from there, you should set up a SWP for the next 12 months. So you are assured of your first year income. Second year, depending on the growth, make sure that, it is 7% or 6.5%, as much as the least that you need. Because 7.25% is a fairly aggressive withdrawal. And if your money grows faster, then you can compare it, on the first year principal that you are putting, then it could well be, 7.25%, but that for the increased capital, it can well be 6%. I suggest, balanced advantage fund, there are quite a few good ones. And from our top rated 5-star and 4-star rated fund, just pick 2 and reasonably sized ones, and that will do the job.
Okay, Rudra, that answers your questions. Now, keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.